Okay, guys, you're welcome. You're welcome. So you're welcome to my channel. My name is Dr. Amonix. And if this is your first time visiting my YouTube channel, don't forget to subscribe to the channel. Smash the like button and press on the notification bell so that you'll be notified the next time I come live or upload my next video. So basically, today we are going to look at the weekly market forecast. Yeah, we are going to look at basically the dollar pairs and the yen pairs. Okay, so I just want to tell you what is happening on the global market. Now, this week, all eyes is on the CPI news. Now, with the CPI news, the CPI will tell us basically the inflation figures that are expected to occur. Fed is expecting the inflation figures to move to 2.0. It's currently around 6 and is expected to get to 2.0. So all eyes on CPI this coming Wednesday. Now, when you check on the chart, you realize that the JPY index has a direct. So after the shift of policies, or after the divergence on policies of each country, there's been a relationship between the dollar and the yen. Okay, so there's been a relationship between the dollar and the yen. Now, let's look at the Euro USD against the yen. Okay, let's look at Euro USD. Let's compare the Euro USD chart against the yen. Now, let me add the yen currency to it. Now, the Euro USD. Now, when you check on the yen and the Euro USD, let me take it to maybe the daily time frame so that you can see it to my wall. Now, look at this. So, over the time, there has been some sort of direct relationship between the Euro USD and the yen. Now, when you watch closely over here at the current spot, now what do you see over there? Now, what is happening currently? Let me remove everything on the chart. Now, let's look at the resistance level of Euro USD. Okay. Now you can see that now the yen index has it's been on a direct relationship or correlation. Okay, when this one comes down, this one too comes down, it went back to hit the resistance zone. This one went to hit the resistance zone. But check what is happening over here. Now these are the internal structures. You can see that the yen has broken this internal structure over here, and it has even come to a fib level around the, let's look at this, around the 50 fib. That means that Euro USD will be expected to fall. It's just that it's lagging currently. At least you can see that it has broken the first internal structure to the second one. Now it has not even, on Euro USD, it has not even broken the first internal structure yet to happen to even the second internal structure. Now, what I'm expecting currently is Euro USD to continue selling to at least this zone. Maybe we should see, so we should see maybe a consolidation within this zone before any action. Okay, now that means that before that, let's go and look at the DXY. What is happening on the DXY? Let's go to the DXY to look at what is happening on the DXY. So the DXY, so previously, this is what I was expecting for DXY. Now, we had So when you check this harmonic pattern, the change of character, which is this one, ended at 88. So the harmonic pattern that conforms with the B ending at 88 is the deep crab. And the deep crab, the D ends at 161, which we have over here. Now, we also saw a pullback to the 50 fib, and I'm expecting DXY. I was expecting DXY to go and touch the resistance zone, form something like a flat drop again before going. Now, in the interim or in the shorter time frame, I'm expecting something like this on DXY. Okay. So at least, so as of yesterday, I was thinking that probably DXY could have shifted down a little before going up. But it seems it has started the up move currently. Now, what you want to do is to draw your trend line here. Now, you can see that DXY has already broken the trend line. So I'm expecting DXY to move all the way to at least this zone, okay, this resistance zone before anything. So that means that XSX USD, I'm expecting XSX USD to sell and USD XSX to buy. Now, let's start with Euro USD. So Euro USD, let's start from the hard time frame. Now, this current zone, I'm expecting Euro USD to sell all the way to the downside. So I'm expecting Euro USD to sell all the way to the downside. Now, what's scary? Let's go to the 4-hour and see what is happening. Okay. Now, we had a harmonic pattern. This is on the 38. So the closest harmonic pattern is 88. Okay. Okay, so I'm seeing something over here where it crossed this wick, crossed this level. So it will be shark or cipher, which will end at 88 fib, which is exactly on the 88. So that means that we'll have a complete harmonic pattern. We had a complete harmonic pattern for a shark pattern here. So on Twitter, on Instagram, I was just preaching the fact that the dollar would always be strong for at least for some time before probably maybe inflation figures. Or see, one thing you should notice that the interest rate figures are still dropping, but inflation figures are also dropping. So once inflation figures are also dropping, interest rate will be dropping. Currently, I think let's look at the figures for interest rate and inflation. So inflation is around 6, and interest rate is around 5. Yeah, that means that we still expect interest rate to go above inflation. There are two scenarios. The current CPI could bring the inflation figures from the CPI could bring inflation figures down. When it brings inflation figures down, it can come to maybe 5.5 or 5. Then the interest rate, which will come from the FOMC news, could bring no impact, which will still leave it at 5, or it can even go up 25 basis points, which can be 5.5. So we want to see interest rate go above inflation so that the economy will be restored for the US. So once it gets to that level, then there will be some consolidation until maybe if inflation continues to drop and interest rate goes up, then the economy will boost. Okay, so for now, let's look at what's happening on Euro USD. Let's look at Euro USD. So the Euro USD, I still expect an up move for Euro USD. I still expect a down move for Euro USD. Now, when you have this harmonic pattern, your first take profit, at least I'm expecting to get to this level. But if you want to trade it based on this harmonic pattern, or whether you want to trade it like your normal price action, this is where you should be looking at your first take profit. So your first take profit you should be looking at is the 38.2, which is this leg, which is 107995, or 61.8. You can also look at these levels, or 61.8, which is your next take profit. So, but in the long term, I'm expecting to get to the bottom of this whole trend, okay? But look at this zone as a first take profit, second take profit here. Okay, so let's look at the other one, pound USD. So pound USD, we called for the sell at the top, amazing. People thought this was not possible, but STR strategy is the best you can ever have. Like, who would have thought? People were thinking that this was an impulsive leg and this is a correction, so it's going to go up. See, Elliott wave is one of the theories that you can never miss in Forex. Elliott wave is an advanced level of, Forex analysis. So when I called this trade at the top. I sent it on Twitter, I sent it on Instagram, I sent it to the Telegram group, and a lot of people were doubting that this was going to go up. And here it is. Now, what's happened over here? Let me show you guys something. Now, this is also in the zone. I'm expecting to come all the way down here. Okay. So this is how I'm expecting it to move. Maybe it should come somewhere here and form something like a double top formation and drop, like a harmonic pattern and drop, before we see maybe an up move or something. Now, over here, so over here, we had an ABC. Now this up move, it could be the beginning of another impulsive move to the top. It's possible, but we want to tackle what is currently happening over here. Now, what is happening over here is called a leading diagonal. You can take it as a leading diagonal if you think, okay, so let me show you guys something. Now, I can take this whole move. So let me take my Elliott wave. I can take this whole move as an ABC correction, which will be wave 1, ABC running flat correction wave 2, okay? Then we have 1, 2, 3, 4, this is a flat correction, 5, becomes wave 3, then ABC flat correction becomes wave 4, and the last move over here is wave 5, which is this one. Now, the wave 5 gave us an ending diagonal. So we have wave 1, wave 2, wave 3, ABC flat. This is a flat correction. And this kind of flat correction is a regular flat correction. Yes, it's a regular flat because this one did not exceed above the start of this move. So it's a regular flat correction. Then we have a wave 5 over here. Now, let's look at what happened at the wave 5. Wave 5 formed an ending diagonal. What do you mean by ending diagonal? So it is an impulsive move, but what happened over here was it gave us an ending diagonal. It was going straight, but it was delaying the process. So we have ending diagonal has 5 waves. Even though it is 5 waves, it will be moving at a slower pace. Now we have wave 1 here, wave 2. The wave 3 of the ending diagonal gave us a flat correction, which was a running flat. So this becomes wave 4 and the wave 5. Now, when it gets to an ending diagonal in wave 5, the rule states that the start of the ending diagonal, the lowest point of the diagonal and the highest point of the diagonal could be the ending part of the correction. That means that when you see an ending diagonal formed, you mark the lowest point of the ending diagonal to the highest point of the ending diagonal. Now, when it's moving, to move at a faster pace at wave 5, and make sure you bring it this way. So that means I'm expecting pound USD to drop all the way from the top to this level, which is this point. So all what I'll be looking out for is a sell on pound USD. Now, the current move forming over here, you don't need to chase it. What you do is that you go to the lower time frame, then the move that is occurring right now, all you need to do is to wait for, this is an impulsive move, wait for a very good correction like this, okay? Then once it breaks, you join to the downside, okay? And once it's going to the, see, this move is already gone. Don't chase it. Wait for a correction. Tomorrow can give us a correction, okay? Or probably Asian session can give us but wait for this correction, get a very good correction, then you can join from here. Don't chase the impulsive move over here. So we are marking this zone all the way to the downside for the move of the ending diagonal. Okay, so make sure you join this ride. Make sure you join this ride. Now, it was a perfect entry. It was a book scripted analysis that you see over here. And you learn these things through my earlier 2F course. You learn this thing through my STR Strategy course. Okay. Okay. So we have AUD USD. AUD USD, amazing. Now look at this. This was a triangle formation occurring over here. I told you guys, see, I said it in the groups that AUD USD is expected to also fall. Now we had a 1, 2, 3, 4, 5. This is a triangle formation. Okay, it's a skewed triangle. All the sizes are equal. Now, once it breaks, you're expecting it to fall. Now, what you can do is that you'll be marking, if you're a day trader, you'll be marking this zone, which it has already hit. Your next zone is to be, your next zone will be this zone. Okay, your next zone will be this zone. Your next zone will be this zone. Okay, so this is the levels you want to chase. These are the levels you want to chase. Okay, these are the levels. And this impulsive move, there is no reason why you should chase this impulsive move. There is no reason why you should chase this impulsive move. There is absolutely no reason why you should chase this impulsive move. If this is your first time watching my analysis, don't forget to subscribe. Don't forget to subscribe. Don't forget to subscribe. Guys, don't forget to subscribe. If this is your first time, don't forget to subscribe. If this is your first time, don't forget to subscribe. Smash the like button, press on the notification bell so that you'll be notified when I upload my videos. Yeah. So what you want to do is to look at this impulsive move. Don't chase this impulsive move. It's far gone, my brother. This is far gone. So what you are looking out for, this is an imbalance. What you are looking out for is the balancing, the fair value gap. Okay, so wait for the balancing of this imbalance, then you join. Okay, then you join to the downside. because there is a lot of sales in the market. There are a lot of sales in the market. So make sure you don't join instantly over here. Wait for a very good correction and join as and when it deems fit. Okay. As and when it deems fit. I am up by $7,000. It's crazy, guys. It's very, very crazy. It's very, very crazy. So it's very, very crazy. So I'm up by $7,000. It's very, very crazy. I don't know if you guys can see it from here. I don't know if you guys can see it from here. I'm up by $7,300. You can see it over here. So it's very, very crazy. And I feel like you guys should take your time. You guys should take your time. Don't chase the impulsive move. Wait for a good correction break and you'll enter. Now, let's look at the other pairs. USD CAD, amazing, 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 amazing. See, it's so crazy, yeah? It's so crazy. USD CAD. Now, what happened with USD CAD was the fact that this one, so we had a harmonic pattern over here, and the change of character for the harmonic pattern ended at 61.8. So we're expecting it to retrace at 78.6, which is this level. It just hit the harmonic pattern, the D of the harmonic pattern on point. It was crazy. It was on point. We smashed the D of the harmonic pattern earlier on. Yeah, we smashed it earlier on, which was this level. Yeah, so this was the earlier harmonic pattern that we had. We bought around here all the way here. Now, this one gave us an ABC. Now let's look at where it ended. We were expecting to hit either 38.2 or 61.8. Now we're expecting it either here or the 61.8, which is here. Exactly. So I still expect USD CAD to go up. I still expect USD CAD to go up. Okay, I still expect USD CAD to go up. It could be at a slower pace, but I still expect USD CAD to go up. Maybe to this level, to this, maybe this one could just be, it could just go to the top here before dropping or something. But on the hard time frame, let me show you guys something. So okay, I don't want to bring your mind towards something bigger. Let's look at the interim or the what we are facing now. Now, I expect it to at least come back to this zone, okay? Come back to this zone. We could see it move to this zone, or let me see if we have any closer move. Yeah, so we can also say that maybe this zone, let me see whether we can get, yeah. So we can choose this zone if you want to be more precise. We can choose this zone. Okay, we can choose this zone to be a more precise zone. So you can either take this one as an imbalance and this one like a fair value gap, let it cross. Now, remember, this one is also a channel. A news can just break it. So for now, even USD, even though I'm trading the dollar, I'm expecting the dollar to push up a little before things change. I'm still very careful with USD CAD. That's it. I'm still careful. So it's not an ideal pair that I'm looking at because the way it's moving, I don't like it. I don't like it. So USD CAD is not an ideal pair that I'm looking at, but I'm still buy bias on USD CAD, but it's not an ideal pair that I am looking at. Okay. Okay. Now UJ. Ooh, damn. Look at this. Oh my God. Oh my God. So UJ2, I'm expecting it at this level. Now I'm expecting it at this level. Okay. It's very, very, so I'm expecting UJ at this level. So I'm expecting UJ at this level. Now, what you can do is that you can use harmonic pattern to gauge it. Now, this is 50. Let's see. We'll consider this one as 50 fib. So if this one is 50, then we expect this move to come to 88 fib. Okay. So UJ, I'm expecting UJ to form a harmonic pattern, which is a bat harmonic pattern. Now, what do you do at the current place? What do you do now? So you ask yourself, what do you do now? So let's go to 1 hour. Okay, you can see it forming break of structure. Okay, break of structure. You can see another one. You can see another one here. So this is an imbalance. Expect that maybe around this zone, we can see the correction of the imbalance. Can see fair value gap. So maybe we will see a correction of it, then we can join. So on the lower time frame, don't join this move. You cannot buy straight from here. Okay, you can't buy straight from here. So what you need is probably like a good correction. Sorry. What you need is a flag, probably a flag. A flag can either be a zigzag, flat, or triangle. So once it breaks, you join the buy. Okay. So that's what you need right now. So you need this move. Okay. So these are internal structures. Maybe it can go up. This can be one wave. So it can just go up like this. Oh, sorry. Then these are all internal structures. So you can have a swing structure. Okay. Before, like the way you have this one, these are internal structures. These are swing structures. So you can have a swing structure along the line to be a full correction of this impulsive move. Yeah. Then once it breaks, you might want to join the buy all the way to the top. Okay, to complete the bat pattern formation. Okay, so anticipate that there could be a swing structure. However, you might want to join the buys all the way on this internal structure all the way here. But note that there can be a swing structure along the line. Okay, so that's it for USD JPY. Wow, Charlie, everything is crazy over here. Hey, your mom, guys, it's crazy, it's crazy, it's crazy, it's crazy over here. It's crazy. It's crazy. People are doubting me. People are wondering why I'm able to hold trades for that long. People are doubting me. It's crazy. Okay, so let's look at the other page. Let's look at the other page. NZD USD, the same thing. Wow. Wow. So we have A, B, C, D, E. Now, this one formed the B. There was an alternation over here. Those who have done Elliott wave. If you've done Elliott wave, you understand. Okay, so this was the whole move. This is a zigzag correction with alternations. So this was the impulsive move. So it came up like this. So from here, wave 1, wave 2, wave 3, wave 4, which wave 4 did not go into the price area of wave 1. So it's still valid wave 4 and wave 5. Now, this is an ABC correction. Yeah, but there was an alternation in the wave B. So that means that this whole move was, let's take it as a WXY. It's an ABC correction, but with alternations. So it's an A, B, C, yeah, but the B alternated with a triangle. So we have 1, 2, 3, 4, 5. So this is a triangle forming the B of the alternation. So then after that we have, so it becomes A, B, C. This is the full correction for this impulsive move. So we are going for another impulsive move like this. So what you need to do, you can either use this one as you can either see it as an impulsive move, or you can use it as a simple harmonic pattern, but I want to see it as an impulsive move. So this one, the sell is already gone. It's already gone. You actually have to sell on this one. Okay, you actually have to sell on this one, but the sell is already gone. The sell, this is a typical AB equals CD, but the sell is already gone. So what you are looking out for is something like this, forming a swing structure. Then you can sell to the downside. Okay, these are internal structures. So wait for a structure, a correction that will break the previous impulsive leg like this. Once it breaks and form maybe a zigzag, flat, or triangle here as a correction, then you can wait, you can join the sell, and you can use your Fibonacci trend-based extension, put it here, drag it here, then you can look out for your 1.0 Fibonacci extension, which is here. Okay. So what you want to do is to look for a correction. The correction, it might not happen today, it might not happen tomorrow, but you've missed the chance of entering the sell. So don't chase the sell at the current price. Wait for a correction. a correction which would correct this impulsive move, and the correction should break the trend of the impulsive move. Once you get it, you draw your trend line like this, maybe something like this. Okay, so you have to wait for the break. You sell, put your stop loss here, and you ride it all the way to the 1.0 Fibonacci extension level. Remember, this one can alternate. It can either be a zigzag, as you see. You can also have a flat correction, okay, then drop, or you can have a triangle formation. And the triangle formation, this one might extend all the way here and come like this before it will drop. So either of them could happen. Anyway, so this is it. This is it. Now let's look at the other pairs. USD CHF, the same thing. I'm not a fan of USD CHF because CHF is far gone than the other pairs. CHF, so USD CHF, let me look at a higher time frame. We still want to see this an evening star. We still want to see this trend broken. It's still not broken yet, so you don't want to make any decision on that. Once it's broken, then we can target here. Once it's broken, then we can target these levels. Okay, we tag there, then we can target this level. But since the trend line is not broken, we still want to be a slave under this trend line. So USD CHF is not something I want to look at. It's not a nice setup. But you can use this one as an imbalance, wait for a correction on the lower time frame, okay? Like a flag on the lower time frame, then you join to the upside. But it's not an ideal setup I want to look at. Okay, it's not an ideal setup I want to look at. Okay, now let's look at the JPY index. So the JPY index is giving us, wow, the JPY index is giving us more. I said this thing was going to go up, okay, then drop, and that's what is happening. So JPY index is still giving us a sell move. Now with JPY index, I want to target this zone. I want to see a sell target this zone. Or we can have something like this. Like this. Okay, so any of them can happen. That means that XSS JPY, I'm expecting a buy for now. Okay, so that's why I closed my pound JPY earlier on. I closed my pound JPY earlier on because I'm still expecting some buys for. So let me show you why I'm still expecting the buy. Now, even if this trade, yeah. Now, let's look at pound JPY on the upside. So I'm just trying to draw the waves. So we have here, it's a leading diagonal. So look at this leading diagonal. It's the same thing happening to pound pound USD. So we are pound USD formed an ending diagonal. So this is a leading diagonal. When it ended, you saw the way it came down to this level. So pound JPY, once the sell is coming in, you should expect it to come down. So we have here as wave 1, wave 2, 1, 2, 3, 4, 5, wave 3, ABC flat correction wave 4, 1, 2, 3, 4. Then this one is a truncation. So we have wave 5 here. Now, so this one is giving us a correction. So the correction ABC, 1, 2, 3, 4, 5. So what I'm expecting, so what I'm expecting is, this is an A. I'm expecting a complex correction over here actually. So this, I'm expecting this one as an A, B, C, which is a running flat. Then this one should form an X like this. Then another A, B, C, something like this. Okay, so that it will be, this ABC will be, so those who have done LL2A should understand this one. So this ABC will be a W from 5. Here will be a W, X, Y. Okay. Now, the X, now where we are right now is basically the X. Now, with the X, I want to assume that the X is forming a harmonic pattern. Now, I want to look at this. Swing low, swing high, swing low, swing high. It did not go up and it broke. It broke here. So change of character. Then it retested here. So it's coming to this direction. Now, what I want to do is to put my harmonic pattern. So here becomes XA. Now, so that means that the B ended at 61.8. So the nearest fib level for it to reach is 78.6 to form a Gately pattern formation. Okay, so these are complex corrections. That is why Elliott wave is the only theory that when you master, you'll be called an Elliottician, because it's not for the feeble, it's not for the feeble heart, it's not for the weak at heart. So you have it like this. So I'm expecting a Gately pattern formation, which will complete the X. Then we have another move down. So pound JPY, I'm expecting an up move and then down. Okay. So this down will complete all the, so this will be a full impulsive move on the higher time frame. You see, a full impulsive move on the higher time frame. Then the down move will be targeting the unmitigated order blocks. Okay. The down move will be targeting the unmitigated order blocks. So what we are interested in is the up moves here. Now, that means that we come to the lower time frame and be looking for buying or opportunity. So with the buying opportunity, let's go to the 15 minutes time frame. Now it's printing higher highs and higher lows. That one alone should tell you that it's an up move. It's printing higher highs and higher lows. Okay, so you can draw your trend line like this. Okay. Then you draw a trend line like this. Now, so you're expecting maybe this one's to pull maybe here to the demand zone and give you another one up. Or you can make it come here and give you another one. But note that even here, it can still go up from here because it has pushed to the demand zone. You can push up from here or it can come down and go up. Okay, so you are waiting for a very good down move, like a flag, okay, like this one. You see, this was an impulsive move, a flag. When it got here and I took out my trade because I knew it was come to go up. Now, this was an impulsive move. This comes down, so this becomes a flag, it pushes up. So you are looking for something like a flag here, maybe like this. Okay, then it goes up, which is a flat correction, or maybe like this. Then you join to the upside. You don't want to, so you want to see that big sell-off before you join. Okay, so that's it for, and the target, that's it for pound JPY, and the target is to complete this harmonic pattern. Okay, the target is to complete this harmonic pattern. That is how I'm seeing it. Okay. The reason why I'm expecting it to go up, at first, I was looking at it forming a higher, like an equal highs and drop. But upon looking at the relationship between DXY and JPY, okay, that means that when dollar is strong currently, then the yen also comes down. In the long term, like in high time frame, when the dollar is strong, the yen turns, okay, so let me show you. I think I did it. Euro USD and let me see. Even let me take DXY. DXY. Okay, so it seems it has a direct correlation currently on the daily. Let me check the daily time frame. Yeah. So, but currently, look at it down. Now, this one comes down. This one goes up. It comes down. So, A, B, C. A, B. Okay, so it's having more or less like, okay, so let me make it more clear. Okay, so there's it. When this one came down, this one went up. It has an inverse relationship. When this one goes up, this one comes down. When this one comes down, this one goes up. When this one is coming down, this one is lagging. So it has to push up a little. So it seems that, oh, this, yeah, so it does it. So it seems that it has an inverse relationship. Okay, so it's good to say that when the dollar is becoming stronger, the yen is falling. Okay, so that is why I decided to go pound JPY buy instead of the sell. Okay, there are some people who don't believe in correlation, but I just proved to them that correlation works a lot. in a way. When you are a trader, I believe that you need to do a lot of research and analysis, okay, because a lot goes into trading than just the analysis. Okay, so that's my take for pound JPY. Euro JPY. Okay, so Euro JPY, it's also a buy as anticipated. Now, so this is the move. Okay, so from here, this is 61, so I'm expecting to come and hit the 78.6 here. Okay, so this move, so this is the move. Okay, on the hard time frame, this is the move. I'm expecting to hit this point. Yeah. You can see that there was a break of structure here. It comes back to the demand zone. It's going. I'm expecting it to form higher high, break this structure, come and be going that way till it gets to this level. Now, when it gets to this level, it will be the birth of this harmonic pattern. And this harmonic pattern is a Gartley pattern formation. Okay, 61, 78.6. Now, what do you do at the lower time frame for this kind of pattern? What do you do on the lower time frame for this kind of pattern? So you are looking for impulse correction, impulse. This was a very good, so this was a good correction. This was a very good correction. Now, this breakout was very, very good. Yeah, this was the entry and the stop loss here. Now, where it has gotten to, this is an imbalance. It can just be trending like that all the way. So what you want to do, definitely will have a pullback, but what you want to do, you want to join these internal structures like this one over here, okay? If you want to join, expect that maybe we can have that big pullbacks and you join. But if it doesn't come, you should know that this is printing higher highs and higher low. It's printing higher highs, higher low. Okay, it's printing higher highs, higher low. So it's either you wait for it to break and come inside and you join, which will be perfect, because once it breaks and it comes inside, it will form a flag. Then you can join the buy. Okay, then you can join the buy to the upside, to this level. Okay. So that's it for, you don't want to join here, because what if it comes down and continue? So this place is not a very good point to enter. You want to see it come all the way to maybe half of this move, somewhere here, and break. So you can be having something like this, A, B, C, like this, okay? Then you would draw your channel, okay? So once it breaks, then you will go up. Okay. So you want to see this kind of moves, like this one, it broke, came inside, gave you a momentum candle over here. Okay, we is a bullish engulfing join, and it's giving you this. So you want to see it move inside. Then if it goes, leave it because it will come back. But you don't want to join above. Imagine you enter here, then it comes here. You'll be shivering because you might think it will go. So why don't you rather wait for it to come inside? Give you a reason to buy, then you join. Okay, so ooh. Okay. So let's look at the others. Okay, so let's look at the others. NZDJPY. Ah, I don't like this setup. I actually don't like this setup because there's been a troll over here. This is a troll over indicating that it's no more valid for the buy unless maybe we have something like this, which I don't see to be possible. So we 1, 2, 3, 4, 5. A, B, C, D, E. 1, 2, 3. X, A, B, C, D. Okay. It makes sense. This way 1. Then you have a flat correction with 3 and 4. Then the with 5. 1, 2, 3, 4, 5. This with 5. So what is happening over here is skirmishes. It's a correction that is forming for this impulsive move. We might see an up move like this to form a harmonic pattern like shark or cipher, then it might drop. Okay. So what you want to see is currently this move. So you had impulse, correction, impulse, correction, impulse, correction, impulse, change of character. So I want to assume that this is the end, because if it had been here, it would have been perfect. Then you buy. If you want to move like this, it's also not bad. Okay, so you can just trade this flag. 1, 2, 3, 4, 5. You can just trade this flag. Now, I'm expecting it to move up from here, but it's not an ideal. Again, NZDJPY is not an ideal yen pair I want to trade for now. Okay, it's not an ideal, but I rather expect it to move up So this A, B, C, D, E becomes one. I see it as one correction for the A. Then A, B, C flat correction becomes the B. It's just alternating. It's just alternating. Sometimes I want to say these things for you to understand how maybe you can form a complex correction, an expanded flat correction, ABC, like this. Then it drops. So that all these ones, this way, all this one becomes A to here. Flat correction becomes B, and the C comes here. So I'm expecting this one to move up. I'm expecting to move up. NZDJPY, I'm expecting it to move up. Okay. The next one is AUDJPY. So even though it will go down, I'm also expecting this one to move up before, because this is a change of character here. So we might either have a harmonic pattern first, which will form something like this on 88 fib, 50, drop down to 88. So we can have this move first before the drop, okay? We can have this move first, which will form A, B, C. We can have this move first before the drop. So on the lower time frame, look for the flags. So anytime you see a pullback, you can join. So you see this one, once you see pullback, you join, pullback, join, pullback, join, pullback. So here, pullback, join, back. Maybe it will break here. Maybe it will break here, cause pullback, you join to take you, okay? So be careful about AUDJPY. Your first target, so if you don't want to look at all this one, you can just target, because it touch there, maybe you might want to see it touch here. So it can, instead of it going up there, it can also just go and touch here and drop. It's possible. So these are the two scenarios. It's either it completes the harmonic pattern or just join this one and drop, and it will also form a harmonic pattern. Okay. So in all, we are expecting it to go up, but your entry is the whole thing, is the whole vibe. Your entry is the whole vibe. You've seen that this one has broken here. It comes in, so it's also even good to enter. But if you enter, you see that your stop loss will be huge, because it has to be here. Okay, it has to be here. So it's either you see more down to maybe here, then it becomes good risk to reward. Then you can enter here, you put your stop loss here, and you ride it. Okay, but here, I don't know, because market can still go down and you can join. Look at this, it came, went here, came more down. Also, normally you put your stop loss below the previous support, like here. Okay. Okay. RJPY, amazing, the same thing, the same thing. So you have here with 1, 2, 3, 4, 1, 2, 3, 4, 5. So this could be with 5. 1, 2, 3, 4, 5. So we can have here, this can go above here, maybe A, B, C, and drop. Okay. Or you can just come and hit this zone, just this support zone, this resistance zone, and drop. Okay, so at least by the time it gets there, you would have made some good profit. So all you need is impulse correction impulse. Now look at this. You see it's printing higher highs and higher lows. You can see it's printing higher highs. It comes to the demand zone, goes up. Okay. So you want to see it move to the demand zone. Okay. Then you can jump. Now let's look at the fib level that it came to. So in the demand zone, this one came to 50 fib. Okay. This one came to 61.8. So if it doesn't continue and it drops, then you want to target between 50 to 61.8 zone, this zone. And you might want to look for buying opportunity to the top. Okay. Okay. So I think, let me check the others. CHFJPY, the same thing. This is an imbalance, break of structure. So once it breaks structure, it moves to the zone. Okay. You can see over here, once it breaks structure, it moves to the demand zone. So you want to see it break structure. You want to see it break structure again and move back to the demand zone, then you can join the buy. Okay, so that's all I have for you today. Make sure you subscribe to the channel, smash the like button, press on the notification bell, so that when I come back to give you this analysis, or I come and give you more videos and analysis, you'll be prompted. I want to also say that now throughout my okay, a moment. So I want to also say that okay. Okay, so I want to say that my recommended broker is FBS. So if you are in Ghana, if you are in Africa, wherever you are, you can still use FBS. I'll leave the link in the description so that once you join, once you register with FBS, you just DM me on Instagram or on Twitter or Telegram. You just use our link. Then once you register, you'll be added to the VIP for free. And so if you already have FBS or you already have an account with FBS, just DM us. We'll give you a code for you to enter so that you can be part of the VIP for free. Now, throughout my 15 years on the market, the most challenging aspect of the business is access to capital. And that is why I want to introduce you to the leading prop firm now, which is Consummate Traders. Now, Consummate Traders has, they are the first prop firm that provides synthetic accounts for their subscribers. So you can trade synthetic accounts. You can also have Express Pro, okay? So the Express Pro take you to the live straight. So you don't need, so challenging period is zero. You don't need to go through any evaluation process for the Express Pro. The Express Lite is just one phase evaluation, okay? But the evaluation also has two phases. So wherever your needs may come from, or wherever your needs may be, they have a solution for that. And their subscription are very, very competitive compared to the other prop firm. They also give you up to 60 days for even the evaluation, unlike other ones, which will give you just 30 days. Yeah. And you can enjoy up to 90% of the profit that you make when you are on the live subscription. Okay. Now, I'll also provide a link in the description. Make sure you register through the link. And once you register through the link or use Dr. Harmonic, Dr. Harmonic as the discount code, you enjoy 5% discount on all offers. Okay. So make sure you jump on to Consummate Traders and get consummated with a lot of capital to trade. Without being capitalized, it's very, very difficult to trade with proper position sizing. Okay. So if you want to do proper position sizing and place your trades the right way, then make sure you are consummated with a lot of capital from Consummate Traders. Okay. So drop your comment and other pairs that you want me to analyze in the future. So don't forget to subscribe, smash the like button, and press on the notification bell. Make sure you share the link to other traders so that they can also benefit from the experience of Dr. Harmonics. My name is Dr. Harmonics, your favorite mentor, and see you in the next video. I'm out. Peace.